Well, hello. Happy Friday. This is The Last Word, a Chrisman commentary show where we wrap up the week. And what a week it was. I've missed the last 2 weeks. Well, I think we all missed 2 weeks ago because of the Labor Day holiday. And then I was in northern Michigan last week. I saw the ratings from the show. Apparently it's a good thing when I'm gone because the ratings were up. So congratulations, guys. But happy Friday.
I didn't know we had ratings. I don't think I've ever seen any ratings.
I was gonna say we have ratings. That's so cool.
Right.
Somebody's gonna rate us. Come on.
Can I say something? I say guys a lot too, but clearly there's two ladies here, not girls, Courtney. And it's such an old habit. And I just got off a call with Polly. We were discussing some stuff with them, and I said, thanks, guys. But there was one lady on there. And then I said, and Lauren, but it's such a bad habit because we say guys, but they're not guys. They're guys, but gals sound stupid, and you can't say girls. So I'm making a conscious effort not to say guys. And let me tell you, these ladies rocked it. That's why the freaking ratings were up last week.
I love it. But just to be clear, you're my guys. So
right. I find it to be a generic term, but that's
Jeff Probst. Yes, that one of Survivor. He for 20 or it's been like 40 whatever seasons, right? I don't know how many. More Survivor episodes than presidents at this point, though. I read that somewhere. But he for 40 seasons, when he would be like, come on, you guys. And like 2 or 3 seasons ago, they mindfully changed the thing that he said for 40 seasons to remove the word guys.
Right.
Oh,
I don't know. I think maybe KP, you could join my crowd and just say humans moving forward, and then you don't offend anybody unless you have some people that identify as cats or birds on your team.
Well, we have one of those in our high school, but I and it's a cat, and there's literally a little.
I know these kids; they're nuts.
Y'all have just shocked me into like, okay.
I know, but
there was that one lawyer during COVID that showed up to court as a cat because he couldn't figure out how to get his filter off.
Oh, that was great. I truly, I'm conscious about it. I don't think guys, but I also know that people in New Jersey, they're like, "What's up, guys? Hey, guys!" Like we have one branch manager. He starts every video, "What's up, guys?" And we're like, "You got to stop saying 'What's up, guys?'" You know what I mean? Because you may be talking to women.
Well, guys.
We did it all. We just went through the whole thing.
We got it. Yep. So let's get into the week that was and sort of still is. I was traveling, so I was at the Virginia Mortgage Bankers event, their annual conference, the last 2 days in lovely Virginia Beach, and I'll share the road warrior woes. And KP is great at documenting his woes. I should have documented mine. So Detroit to Norfolk is hour and 10 minutes, easy peasy flight. And so Wednesday, we leave Detroit, everything's good. We actually left early and we're starting our descent into Norfolk for an early arrival. And nose is down, life is good. And then all of a sudden you get the, pulling it back up and no description of what was going on. So we circled for like 12 minutes. And then the pilot came on and said, well, the weather ceiling dropped on us and we're on a little 2x1 plane. The weather ceiling dropped. We're going to have to circle and find a window. So we circled for 20 minutes and then he came back on and said, doesn't look like the weather is going to drop. So our plan B is to fly to Raleigh-Durham, which not very far in the air, but not very close on by road. Right. So we land there. We're sitting for 45 minutes. They taxi again. We're going to go try again. We got our weather clear. Just as he's about to gun it to take off, abort the mission, and they take us back to the gate. This time they deplane us, and I just said, you know what? I sprinted to a rental car place and then did the planes, trains, and automobiles to drive 3.5 hours to make my dinner. So, but other than that, the Virginia Mortgage Bankers event was wonderful. They did a great job. A couple new CMBs were pinned, certified mortgage bankers were pinned by Dana Abernathy. Just a cool group of people, a great event. And we talked a lot about Kristen Messerly's latest Next Gen Homebuyer Report, which, folks, if you haven't seen it, you need to check it out. If I can figure out how to get my LinkedIn to open up, I can put a link to it in the chat. But the latest report is really fascinating. So she did a mid-year Next Gen report, 500 new respondents to the survey, and anxiousness, anxiety, is up with these prospective home buyers. And the most fascinating statistic was where these first-time home buyers are going to search and prepare and research. It was 31% of them in January were going to AI, Chat, GPT, Claude, et cetera. It jumped to like 65% in this mid-year cohort. And so what was discussed and talked a lot about at this Virginia Mortgage Bankers was, what are we doing as an industry? What are we doing as lenders and originators to leverage and be prepared to show up where these folks are now researching, which is in these, large language models and in these different AI platforms. So really cool to kind of see in a short period of time, how the trend, we're seeing consumers shift and use the tools, but now we're all having to adapt and make sure we show up now, in those searches in those platforms. So just curious if, as you guys kind of are doing your thing, if those are some of the findings and conversations that are kind of happening out there.
I was in Dallas yesterday for a smaller event that Loretta hosted. And there was a woman from Assurant there yesterday who said the same thing about insurance and insurance claims processes, that the number one resource for, should I make a claim on my policy based upon this? What should I do if I want to switch carriers? Is the same source. And so, I mean, it is the new world order to a certain extent. I know that you guys have, varying ages of children, but now even for my son's schooling, they have to disclose whether they used AI for anything, right? And any of the things, moving forward. And I just feel like it's the new world order. Is that better than YouTube? Maybe.
It's so interesting that you talk about that, especially where school is related, because we didn't have this thing that I'm gonna tell a story on myself. So I wrote a paper in like 10th grade, which was high school, the beginning of high school. 9th grade didn't start high school when I was in school, and so I wrote a paper in the 10th grade, and I turned it in and got a grade on it. And then I turned it in. I changed schools, and I turned it in, the same paper in again, and then I turned it in again in college, right? If they had had the same tools then that my son's school had, because they had this plagiarism thing where every paper gets uploaded. So it would have said I plagiarized myself 100%, and that wouldn't have been okay. And so what a lot more work, right? Because it was a really good paper. I got an A on it in all three opportunities. So how does this mean and change the value of the learning that our kids are getting? Is it better? Is it worse? Does it just set them up for success for where they are today if it's properly handled?
I'll chime in. How's my audio, by the way? I switched to my 1980s headset.
Sound like better than Howard Stern.
Yeah.
Yeah, sounds great.
Do you want me to start buzzing on the microphone? Okay. So, anyway, Christy, you look really small, and Brian looks humongous. So I had to move up instead of get back. But so the word, if you haven't heard it, is called geo. So there's SEO, right? Search engine optimization. Now there's generative engine optimization. And so long form content is what large language models, LLMs, like Grok or ChatGPT, whatever, that's what they scrape. And what's funny is I had a lunch with George Morales from Cadence yesterday, and he goes, I searched you and I wanted to show you what came up. And now what was interesting is one of the source documents that it was pulling from was this interview I did. I swear it must have been like 4 or 5, maybe even 6, 3, 4 or 5 years ago. It was with Duke And I did this like 90-minute like interview, and they were doing a study on the financial crisis, and they wanted to get a perspective on what the financial crisis was all about. And of course, I blamed it all on Wall Street and all the exotic products. And anyway, because that was such a long form piece of content that I was like, that's what showed up. And then of course it scraped my LinkedIn stuff. And so long form content is where these large language models are grabbing. And so putting more of that out, writing, if there are transcripts of podcasts like the ones that our LinkedIn user just put in there with the home IQ stuff, that's where they're scraping. And so that's how you're trying to get stuff to show up in geo and win from there. So I literally just went through this yesterday, and I just thought I'd drop some insights. Great question.
But that's what loan officers need to be thinking about, doing that at a hyper local level, right? And so like I do this weekly podcast in addition to this weekly show. And so I've taken most of my podcast, the transcripts, and I repurpose those into a long form article, blog type content. And I put a link to the Chrisman commentary website. They have a great thought leadership part of the website. I'm blessed and fortunate to be asked to present there from time to time. But I'm giving away the secret sauce, but I'm taking conversations that I'm already having for my podcast, spending 30 minutes using tools to turn the transcript into an article, and then we publish it on that website. So if I'm a loan officer, I'm doing the same type of thing in my community and making sure that I'm showing up now in that geo search, just like we've all been trained to show up on the SEO side.
Right.
Well done.
It's a new skill we have to learn, and it's a new skill that our loan officers are going to have to learn. And then we've got to think about what is the regulatory environment and what are the guardrails that we need to put around it, so that we are compliant in what we're doing. And because we know the regulations don't catch up with us as fast as what we do, and how the industry is moving and changing. And so, hats off to Courtney over there who tries to keep us all in check.
No, I'm Dr. No over here. Don't worry about me. I actually was a huge proponent of the use of most digital tools. Although, you guys, I gotta say, I hung out with this guy, Roger, yesterday from New American Funding. He was fun as fun can be. And I don't normally have fun at mortgage events. I'm not fun like you people. I like rules. I like keeping things serious. And I went to go find him on LinkedIn today, and I couldn't find him. And I was like, he's old school. I like that. You know what I mean? Like, it's kind of like you have more credibility if you don't have long form content these days. I don't know.
Shout out Roger. He doesn't exist.
Good job, Roger.
He's a lurker, or a ghost. I mean, look, that rollout you guys just did with your servicing experience is a big deal. And, reputation management is very important, right? And what I did notice is the large language models are not picking up on surveys. And that can be both good and bad. Like if you've got like a nasty gram one, like, oh, my loan officer didn't communicate with me. And I mean, it's like overwhelmingly, we're like 4.9, right? But then every now and then you get a bad one, and we have someone that manages all of our surveys, and we get a report every week of anything less than perfect. And, sometimes it's one or two, sometimes it's, a Glassdoor review, when you're a big company, you obviously can't make everyone happy, but I'm glad the large language models aren't being like, oh, well, KP's a loan officer and he works in this area as an originator, but every now and then he doesn't communicate. Could you imagine? like if it was scraping that, and so far it hasn't been. So I guess it's not scraping Google reviews or Bird Eye reviews that we use. I know experience.com is a great one out there. So I haven't seen any of that show up yet. And again, that's good or bad. So anyway, but I know people, they go to Yelp and they go to all these different areas, and they look like, well, who am I working with here? Who's this Brian View character? I'm gonna go check him out. Oh my gosh, this listing agent said he didn't call her back, so they're not going to call me back. But then, of course, Sometimes you can't tell the listing agent, like, hey, here's the deal. The borrower's credit sucks. We've been scrambling. We've tried like 5 different non-QM programs. We're repairing their credit. This is a problem. They don't have assets. We're having a real problem in underwriting. You can't really tell the listing agent that. To be fair, they're not really supposed to be privy to that information. So a lot of times, if we ever have a negative review, not to go down this tangent, but it's usually from a listing agent that seems out of the loop when we're just trying our ass off to get the deal to work, right? And that's why sometimes, you go dark, and we're like, you've got to be nice to these listing agents too, because they could be a referral source later. And so you have to be careful about what you share with them, because they're not, to be honest, even the buyer's agent isn't supposed to be privy to private information like what I just generically said on the making of the sausage behind the scenes to get a loan done.
So I'm going to shift gears here midway through our Friday show. Once again, The Last Word, a Chrisman commentary weekly show. So there's a couple news items that popped up. One in particular that I thought was very interesting relative to the impact on mortgage performance due to things like rising cost of insurance, escalating property taxes, inflation, right? All of these things that happen. Life happens after a loan is underwritten and approved and funded. Life happens, and we're starting to see, I think, some of the impacts of life events happening. And so a lender out of Atlanta, EPM Mortgage, has backed away from certain markets with their FHA product due to some elevated delinquency. And I just thought it would be good to kind of talk about this, because we've talked about this before. We focus so much on getting somebody approved and closed based on this snapshot in time. And now we're seeing kind of some of the impact, like I said, to these other life event type stuff that happens post snapshot in time. And I'm just, I've kind of thrown it out there just to, what should we be thinking about in terms of as we're evaluating these customers? And in a lot of cases, in this particular lender's case, the loans that they're making in the communities they're making in them are to people that need help. They need a lender like EPM who's willing to kind of roll up their sleeves. And I know PMG is another great community-based lender. But just want to kind of talk about that, because that's, the headlines say one thing. Guys, don't get fooled by the headlines. Read deeper. EPM did not lose their ability to write FHA loans. They've backed away from certain markets, but would love to just kind of talk about that a bit.
There was also a subprime auto lender that goes into underserved communities that has had some serious delinquencies that it looks like they're going to default on their lien that they got to make those loans, right? So, it's a conduit just like we are for mortgages. And so this is happening all over. When you go into underserved communities, there's a reason that the big guys, or it's called cherry picking, that there are certain loans, are more likely to repay. And we need to go into underserved areas. We need to go into those populations where there are banking deserts or financial institution deserts, because if not, these guys end up with going to payday lenders and loan sharks and, pawn shops, and they get in a cycle that's hard to get out of. And so there's got to be a balance there, but there has to be a balance with understanding too that you can't predict the future. I would love to have a magic 8 ball or a crystal ball that works every single time and know what's going to happen, but you can't. And we have to rely on the tools that we have. And as an industry, we keep talking about expanding those tools. And how do we make better decisions? Because I don't know anybody, not in this conversation or in any conversation I've ever had, that says, yeah, I'm just making loans and hoping they foreclose. Like, that is not our industry. We are trying to create first-time home buyers, not first-time foreclosers. People care about that. We care that people get in there long-term. We're trying to help them create generational wealth and get into a better financial position. And so I think the conversation has to shift to what are the right tools, what are the right measurements, and how do we put things into place that help people when they get into situations that they can't control. The economy goes into a recession, or there's a job loss of some kind. What kind of safety net are we putting in place for all folks? And what does that? And I don't want people to come at me in the comments and be like, okay, well, the government can't pay for everything. That's not what I'm saying. I'm just saying, like, what should be in place? This should be a place of conversation.
Courtney, you have huge insights with that servicing book. You've got to have some super duper inside knowledge.
A couple things. We have like a wonderful industry that I think on the whole cares about humans. I don't think our compensation models on the sales side, though, actually speak to long-term home ownership. I think that that's a little bit idealistic, maybe not wrong for some folks, right? But I don't know if that's universally applicable. I'm going to pull a card from the book of, I don't know. I just made Brian a gospel and a tarot deck at the same time. I'm going to pull a card from the book of Brian View.
Oh boy.
And I'm going to say that being a loan advisor in this instance is far more important than being a loan officer because of interesting fun facts like this. This morning, I was looking at a real estate, I was doing my Zillow porn, right, on an airplane. And I was like, how does this house that I'm looking at cost this much money? And then I was like, how much have houses increased in 10 years since the last time this thing was sold in the Metro Detroit area? 100%. 100% is the number, right? What has happened for insurance rates in the last 10 years? Yesterday, I saw that they've gone up from, this is like me spitballing here, guys, somewhere around $1,000 to $1,200, over, 20%, 30%, 40% taxes. What happens with taxes when values go up like that? Have you ever bought a house from a person that passed away? When that property uncaps and you pay the gap in mortgage taxes of 35 years, it's a problem, right? It's an affordability issue. I think that we really need to be preparing people at the closing table. I won't say that we need to make rules, but maybe we need to make rules about proper advice to consumers about the total picture, particularly if you're pushing it and reaching from a DTI perspective. Right. And so maybe it's not all loans, but if they are high risk loans, if you are within 10% deviation of qualification, right? If you're pushing to qualify, I would say that it's irresponsible to not be a loan advisor in those moments because taxes will go up, insurance will go up, FEMA maps will be redrawn. Hopefully, gosh, please somebody redraw the darn FEMA maps, right? All of these things are things that can happen. That can impact the total cost of homeownership. And we haven't even gotten into 5 years from now, you might need a roof.
Right.
Right. And we haven't even gotten into, which was an interesting conversation I was a part of yesterday, how making claims on insurance makes insurance more expensive. Do folks understand how homeowners insurance actually works at the end of the day? And so obviously, I'm the consumer guru in the room, in this regard. I also am the downstream recipient of what a lot of the mortgage industry does, being a mortgage servicer, right? And I just think that humans fundamentally don't understand how this works. And the more education that you can give them and the more reliable information that you can give them, the better. And in today's environment, I actually think that you have to Twitterfy it, right? We've started calling them cave pagers in our crew. And what I mean by that is that you have to synthesize things down into because people's attention spans are getting smaller and smaller and smaller. We're back to the AI, conversation here, right? People aren't paying attention, right, on top of it. And so you could even be a well-intended loan officer that wants somebody to be in their house for the long term, wants to help them with that dream. But if you're not, oh, by the way, you're within X distance of this, or, oh, our county is redrawing maps, or you need to know these things so that you can advise on, what somebody should expect year to year. And can they still afford that regular monthly mortgage payment if something were to change? My dad always said that you spend what you make along the way. And I've always thought about that. I've been very, very fortunate to work with really, really great companies just right out of law school over and over and over again. And I've had wonderful opportunities, but I'm not sure that he's wrong. And so I think you could see that everyone is on the brink of affordability, depending upon what they're trying to do with their financial picture. And the bigger the house you have, the more money that you have into one of these things, the bigger repairs are going to be, et cetera. And I just don't know that overall financial responsibility is a hallmark, and education is not required. Just because you can be approved for $800,000 in mortgage loans certainly doesn't mean that you should take it. Right. And so it's hard, and it's hard in an environment where all the houses are 100% more than they were, 10 years ago. And so sticky wicket, but I would say that there's the metric right now is the average consumer still has 1.5 mortgage payments in their bank account.
Well, I would just, your point is well taken. In 10 years, home prices have doubled, right? So that gets kind of cleaned up in the moment on the new loan, but insurance has gone up, 400%. And so, I love that we have mortgage titan and my friend Bill Dallas on here in the comments. I love Bill, love his energy, and he's right. Originator and servicers need to be more aligned. In your case, at CMG, it is, but it's not, right. And so it's not for a lot of origination platforms. They aren't the servicer. If the broker share is 20 to 25%, depending on what report you read. They're not servicers. Bless you. They're not servicers. They're not going to be servicers. They don't have the money, to even pay for one EPO, right? And so, you have to, as a lender, the burden falls on us to shepherd those originators through all this. But borrowers, if you look at the Fed, they're looking at lagging data, and wage growth is 4%, which is higher than inflation, so they should be good. But we know that in reality, the major reason for default is if you lose your job. So if you lose your job, you have no ability to repay. But to see that some people aren't able to keep up because of both taxes and insurance that go up endlessly, it's becoming more of a real problem. And so I don't, headlines in the media kind of like make me sick. I mean, you brought up one, Brian, about Eddie Perez's company, EPM, that they got terminated. They did not get terminated. They have, that was a false headline from Housing Wire. They have 4 jurisdictions where their DQ numbers are high because they take risk and they do the tough loans for first-time home buyers to help them get into it. And so, they're going through their product, and they're maybe tightening, some of their gift requirements, and maybe some of their FICO and or LTV requirements, maybe just specifically on those 4 MSAs to try and get those numbers up. I always joke, at PRMG, we do the tough loans. We do manual government underwrites, and we have the Ginny DQ numbers to show it. And so it's damned if you do, damned if you don't. The last administration was like, go out and do more affordable housing, and we're doing it. A lot of banks don't do it. Builders don't do it. Builders have 43 DTI cap most of the time. So, companies like Eddie's and ours, we're doing, I like to say the Lord's work, not to make it, so grandiose, but like when you put someone in a house, it is a big deal for them to start building wealth. And over time, overwhelmingly, people are keeping up with payments, and they are on time. FHA DQ numbers for 30-day late is like 9.75%. For serious delinquency, defined as 90 days or more late, that number is closer to around 4.5, which I've always said mirrors the unemployment rate. So, Housing Wire drags erroneously and falsely, Eddie's company through the mud. And so I'm glad, Brian, you gave us the chance to correct the record, because, sometimes they want to get clickbaity and they want to get headlines. I don't click on those articles because I know there's more to it. And so, I mean, gosh, I was reading, I'm not political. I have my beliefs, but I don't watch the mainstream media. But imagine if you got your news from New York Times. Charlie Kirk, man 31 dies. And then the whole article just dances all over his grave and talks about him being a firebrand. How about, I'm trying to be a 6 and not a 10 here because I don't want to get emotionally charged. But This was a live stream political assassination where his neck got blown out in front of our kids at a college campus. Just trying, I mean, even the guy that was talking to him at the end was talking about these shooters and, was asking him while the guy got shot. And that guy was interviewed after the fact. He's, kind of an anarchist guy. And he was like, I feel awful. Like, I feel so bad because he's been destroying Charlie Cook on all of his social media over time. And there he was, the last question. This guy's like, man, this really hit home for me. Like, we need to tamp it, down our rhetoric and tell the story. This is a father with 2 kids and a husband, and he was murdered in front of other people live streamed for a political reason. So headlines are very deceiving, and where people get their information, whether it's about the loan up front or what's going on in the world, where you get your information matters. And so I just refuse to go to clickbaity type places because we need to tell the real story. That's what we try and do here on The Last Word. And the real story is, it is challenging for first-time homebuyers, and we have to do a good job of educating them up front and tell the whole story, the real story. And it is a privilege and an honor to be a homeowner. And it will get more expensive as time goes on. So keep your job, ask for raises, make sure you don't fall behind on payments. It's not okay to miss a payment 30 days. I mean, some people think it's okay. I mean, actually, we do door knocking, which is something I know Eddie, Perez, and team have done. Like they're doing more door knocking even when someone goes 30 days late, and they're like, hey, borrower, dude, you can't go late. Like, you have to make your payment, And sometimes people are like, oh, I didn't know. I just was skipping a payment. Like, this is not good, Like, even something that we think it takes so basically, consumers don't even know after the fact. And so originators have to do that work. Servicers have to do that work. And overall, the system is still very healthy, but there's always room for improvement.
Well, I'm going to give a plug to my friend, Ellen McCarthy. She started a company called Truth in Media, and it's a nonprofit where her goal is to get that message across, right? That we have to move away from the headlines, and we have to move away from creating things that aren't the truth, and really getting the truth out there and creating a way to have dialogue.
All right, guys, we're going overtime. Our advertisers are clamoring. Always love the conversation, love the energy. We love the interaction from the audience. So it's cool to get the interaction. We can keep the conversation fluid. Christy, Courtney, KP, always great spending a half hour with you every Friday. We'll see you next Friday right back here on The Last Word.
Have a great weekend. Cheers.